Today, we are reviewing Pulse Engine, an MT5 expert advisor developed by Jimmy Peter Eriksson. At first glance, this EA looks interesting. The public forward test has started strongly. It does not appear to be a grid EA. It does not appear to be a martingale EA. And it does not look like a dangerous one-shot blow-up system. But there are also some important warnings. The long-term backtest is not perfect. There are long periods of stagnation, and the trade direction seems to be biased by symbol. So in this video, I will quickly break down what looks good, what concerns me, and what I will keep watching. First, let's look at the public forward test. As of this review, Pulse Engine has shown strong growth since 2026. The signal shows about 43% growth over roughly 12 weeks. The profit factor is 1.41. The win rate is around 52%, and the maximum deposit load is only about 1.8%. So far, this is a good start. The balance curve is rising, and the account does not appear to be using excessive margin. But this is still a short track record. 12 weeks is not enough to prove long-term stability, so the forward test is positive, but not conclusive. One good point is the risk structure. From the trade history and backtest behavior, I did not find clear signs of grid trading. I also did not find martingale behavior. That means the EA does not seem to keep adding positions endlessly when the market moves against it, and it does not appear to increase lot size aggressively after losses. This is important. Many EAs look great at first, but they survive by hiding risk. Pulse Engine does not look like that type of EA. So, from a structural risk perspective, this is a positive point. Another positive point is that Pulse Engine does not look like a scalper. The average holding time in the public forward test is around 7 hours. This is very different from ultra short-term scalping EAs that enter and exit within a few minutes. Why does this matter? Because scalping EAs can be very sensitive to spreads, slippage, and broker execution. Pulse Engine may still be affected by trading costs, but it is probably less fragile than a micro scalping system. That is another positive point. The risk-reward profile also looks reasonable. In the forward test, the average winning trade is larger than the average losing trade. The average profit is about $15. The average loss is about $11. So, this does not look like a typical system that wins small and loses big. That is good. It suggests that the EA is not relying only on a high win rate. It seems to be trying to capture a reasonable amount of price movement. Now, let's move to the backtest. I ran my own backtest from 2005 to 2026. The test covered XAU USD, USD JPY, EUR USD, GBP USD, and US Tech. BTC USD was excluded. The initial balance was $10,000. The lot size was fixed at 0.01 lot, and all other settings were left at default. The result was profitable overall, but the balance curve was not smooth. This is the key point. The backtest curve goes upward in the long run, but there are long periods where the account does not grow much. There are also periods of decline and stagnation before the later recovery. So this is not a smooth ride. It is not an EA that steadily grows in every market condition. It may require patience. And if you only look at the final result, you may underestimate the difficulty of actually running it for years. The backtest profit factor was 1.07. That is profitable, but not strong. The total net profit was about $4,825 over the full test period. That sounds good, but for a 20-year test, the edge is not extremely large. The total number of trades was over 42,000. So small changes in spread, slippage, or broker execution could affect the result. This is why I would not judge this EA only by the final profit number. The drawdown is also important. With a fixed 0.01 lot size, the maximum equity drawdown was about $1,300. That is not small. This is why I prefer to look at the absolute drawdown amount, not only the drawdown percentage. If the starting balance is larger, the percentage looks smaller. If the starting balance is smaller, the percentage looks larger. But the actual equity fluctuation at 0.01 lot tells us how much capital pressure the EA can create. If you trade all symbols at the same time, this EA may require a larger account balance than it first appears. Now, let's talk about the trading style. The entry pattern is not very easy to identify. In many cases, the EA appears to enter after pullbacks or rebounds. Sometimes it looks slightly counter-trend, but I would not call it a pure counter-trend EA. It may use different filters for different symbols. The important point is this: the entries do not look random, but the logic is not obvious just from the chart. So we need to judge it mainly by behavior, risk structure, and long-term results. Here is the XAU USD M15 trade history. White arrows are buy trades. Red arrows are sell trades. On gold, there are many buy-side trades. This is not necessarily bad. Gold has had strong long-term upward phases, but it means we should check whether the EA is benefiting from that long-term direction. On the XAU USD H1 chart, the same tendency is visible. The EA often trades on the buy side. Again, this can work well when gold continues to rise. But if gold enters a long bearish phase, the result may change. Now look at EUR-USD. Here the EA has many sell trades. This is different from gold. The system seems to behave differently depending on the symbol. That may be intentional, but it also creates an important question. Is the EA truly adaptive? Or is part of the result coming from long-term directional bias? For USD JPY, buy trades are relatively common. This makes sense when looking at recent long-term market movement. But again, if the long-term direction changes, future performance may also change. US tech is even more interesting. In the visible trade history, trades are mainly on the buy side. This may work very well in a long-term rising index market, but it also means the EA could depend partly on bullish market conditions. So, the directional bias is one of my biggest concerns. XAU USD, mainly buy. US tech, mainly buy. USD JPY, buy trades are common. EUR-USD, mainly sell. GBP USD, mainly sell. This does not automatically mean the EA is bad, but it does mean that performance may depend on long-term market direction. If the market environment changes, the forward test may change too. This is the main question. What happens if long-term trends reverse? If gold stops rising, if UTech enters a weak period, or if Euro USD and GBP USD move differently? Can Pulse Engine still perform well? At this point, we do not know. The forward test is promising, the backtest is profitable, but the long-term robustness is still unclear. That is why I would keep monitoring future forward results. So, here is my final verdict. Pulse Engine is a very interesting EA. The public forward test has started strongly. It does not appear to use grid or martingale logic. It does not look like a dangerous one-shot blow-up EA. It is also not a scalping EA, which may help with reproducibility. However, the long-term backtest is not very strong. The profit factor is only 1.07. There are long stagnation periods. The equity drawdown is relatively large, even at 0.01 lot, and the symbol-by-symbol directional bias is a concern. So my conclusion is this. Pulse Engine has a promising start, but it is not proven yet. I would not call it a high-risk grid or martingale EA, but I also would not call it a fully confirmed long-term stable EA. For now, I will keep watching the forward test carefully. If it continues to perform well through different market conditions, the evaluation may improve. But at this stage, caution is still necessary. Thanks for watching. If you want more EA reviews and MT5 backtest analysis, please check the full article and follow Forex Robot Lab.